Hi guys. So in this video, we will be discussing the solutions for your practice drill. So I have already presented to you the question along with the the problem along with the questions. So as shown in your what do you call this one, solutions manual, the easiest way or the most convenient way of answering these questions is by journalizing the transactions that have transpired all throughout the period. So let's start with the transaction on January 1. So issuance of preference shares at 60 per share. Now we know that the preference shares par value is at 50 pesos. Whatever is above 50 pesos is now considered as your share premium on your original issuance on preference shares. Okay, so upon issuance, this is already subscription and issuance occurred in the same date. So since issued naman sa derecho, no need to kanang make what they call this one. No need to journalize the subscription of the shares. You can directly debit cash and credit the preference share capital and the preference share premium. So in this case, you have received cash worth 15,000 shares at 60 each. Okay. Ba't yan kwan? Okay, and then for your preference share capital, you should credit it at par value. So preference share capital, that's 15,000 shares, having 15,000 shares at 50 each per par. And for your preference share premium, preferred share capital, preference share, no preferred, preference share capital. Preference share premium. So your share premium is 60 per share, the issuance price, less the 50. So that's 60 minus 50, that's 10. So 10 times 15,000 times 10. 150,000. And as you can see, our debits and the total of our debits and the total of our credits are now equal. Now, next is we have issued 25,000 ordinary shares at 25 per share. Again, for our issuance, you have received cash worth 25,000 shares at 25 each, 625,000. Now, your ordinary share capital upon issuance should be credited at par value, ordinary share capital. So that's 25,000. Our par is at 10 pesos, so times 10, 250,000. And then our ordinary share premium would be 25,000 multiplied by the excess of the issue price over par, which is 25 minus 10, that's 15. So times 15, we have a total of 375,000. Now, what if kanang giagi ni siya subscription before siya nabayaran? Always remember that share premium on original issuance is recorded on the date of subscription. Okay? For example, no, niagi siya subscription before siya na-issue, your share premium is recorded on the date of subscription, while on the share of issuance, what do you call this one? What is credited is the par value. What is credited to ordinary share capital is the par value of the shares, and your debit for that would be subscribed share capital, ordinary or preference, whichever type of shares was subscribed. Okay. And then on June 1, issued additional ordinary shares in a 2-for-1 share split. Now, for the issuing corporation, share splits are recorded via memorandum entry. Okay, so issued before we do our memorandum entry, we have to know first how many shares have been how many additional shares have been issued due to the share split. No, now the share split is 2-for-1. This means that for every one share, the shareholder will receive two shares. So if the share split was 1-for-2, that means that we have a split down, which means it will reduce the number of shares outstanding. But for this case, our share split is 2-for-1, so two shares will be given to the shareholders for every one share that he holds. So that means we have a split up. For split ups, remember that the number of outstanding shares will increase, and for split downs, the number of outstanding shares will decrease. While for split up, par value will decrease, and for split down, par value will increase. Now, always remember that split downs or split ups will not only affect the number of issued shares, but it will also affect the number of shares on treasury. Okay? Because as I have said kanina, share splits will affect the number of outstanding shares. So since we're talking about outstanding shares, and outstanding shares are computed by deducting from the issued shares the number of treasury shares, thus, when we increase the number of issued shares, we should also increase the number of shares in treasury. So with that in mind, the number of issued ordinary shares, issued and outstanding ordinary shares as of this date is, so we have 1 million shares. Excuse me for a bit. So ayun, I'm back. Where were we? So ayun. Again, so on June 1, before we do the memorandum entry, we still have to compute for the number of outstanding ordinary shares as of this date. So originally at December 31, 2020, our number of outstanding and issued and outstanding number of ordinary shares is at 1 million shares. And on February 1, before the share split happened, we I issued additional 25,000 shares. That means that the total number of issued and outstanding number of ordinary shares is 1,025,000. So since this is a 2-for-1 share split, that means that our number of this is our current before. Let me just compute it here. Before split, our number of shares is one 1,000,000, where is it? Okay, 123 plus 25,000. So that's it. Okay, and then due to the split, so our effective split is that 2-for-1. So that means that we have to multiply our 1,025,000 shares by 2 to get our new number of shares after split. So that's 1025 times 2, 2050. Now, the 1,025,000 shares is already in the hands of our shareholders. Thus, the number of additional shares that we need to issue because of the share split is, of course, the number of should be issued and outstanding after the split less the the number of issued and outstanding shares, what do you call this one, before the split. So the additional number of shares that we have to issue because of the share split is 1,025,000. So your memorandum entry here would be issued additional 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 1,025,000 ordinary shares due to a 2-for-1 share split. Now, always remember that share splits do not change the composition of your shareholders' equity. The total of your share capital will stay the same. The total of your share premium will stay the same. The total of your retained earnings will stay the same. What will change here is just the number of shares authorized, the number of shares issued, the number of shares in treasury, the number of shares outstanding. It will also change the par value per share of your of the shares that was of the par value of the shares that undergone split. Okay. So after that, let's go to July 1. We acquired 20,000 ordinary shares at 14 per share. So at this point, we now know that our par value per share is, again, as what I have said kanina, when there's a split up, the par value of the shares will decrease. So if we have multiplied the number of shares by 2, we now have to divide the par value by 2. Okay, so our new par value is 10 divided by 2. That means our new par value per share is 5 pesos. So, but however, in this case, since this is a reacquisition of ordinary shares, this means that this is a reacquisition of treasury shares. And when it comes to the acquisition of treasury shares, we ignore par and original issuance price all in all. What we only consider is the acquisition cost of the treasury shares, which is at 14 per share. So we debit treasury shares dash ordinary ordinary. By how much? So we have reacquired 20,000 shares at 14 each. And then this is ordinary. Why am I have? And then we paid for cash, so that's same 20,000 at 14 per share. Now, in a sense, guys, this acquisition cost of your treasury shares behaves like the par value of your ordinary shares. Okay? What do I mean by that? When these treasury shares are reissued above its cost, the excess is credited to share premium on treasury shares. Just like when you are issuing ordinary shares or preference shares, wherein the excess of the issuance price over the par value is credited to share premium. Okay, so again, if you have reissued your treasury shares above its cost, any excess will be credited uh, to share premium. Now, what will happen if the treasury shares are reissued below cost? Now, remember that for original issuances, corporations are not allowed to issue. By issue, it means original issuance, to issue shares below par. However, treasury shares are a form. Treasury shares, when reissued, is a form of reissuance. It's not a form of original issuance. Thus, when it comes to selling or reissuing treasury shares, the corporation now can sell or can reissue the treasury shares below its cost, which means below the cost of treasury shares, which could be below or above par. Okay, so in this case, on October 31, we have reissued 15,000 shares at 16 per share. Okay, so that means we have received cash worth 15,000 shares times 16 per share. 16. No. 16 per share. As you can see here, the reissuance price of our treasury shares is above its cost of 14. This means that we have a share premium, on treasury shares. So we have debit on treasury shares, ordinary. Of course, we debit it at cost, ordinary. How much is it? 15,000. 15,000 times 14 at cost, of course. And then our share premium on treasury shares is 15,000 multiplied by the excess of the reissuance price over the acquisition cost, which is 2 pesos. So 30,000 pesos. Now, if you're asking, sir, where is your appropriation of retained earnings? Okay, so I just skipped that. But if you want to be correct, no, or if you want to be detailed, you have to journalize for the appropriation of retained earnings due to the acquisition of shares. So let's do that. Debit retained earnings for the amount of treasury shares, 280,000. And then we have to credit appropriated retained earnings. Appropriated retained earnings. Or appropriation for treasury. Appropriation for treasury. At cost, okay? So 280,000. Now, when our treasury shares are reissued, of course, we have to also adjust or decrease our appropriation on treasury shares, because the cost of our treasury shares now have been reduced due to the reissuance. So we debit appropriated or appropriation for treasury. treasury shares, which is at cost or at par value of our, not par value, which is at cost of our treasury. So that means 15,000 times, what do you call this one? Times 14 per share. So at 210, and then retain earnings. So 210,000. Okay. What else? So our profit for the year is at 2.5 million. So our profit is we have to, in closing our profit, we have to debit income and expense summary account. Expense summary account 2.5 million, and then retained earnings 2.5 million. Okay. Okay. And then our last entry would be declare the regular dividend and preference shares. So there is a shortcut no in computing for the dividend per share of our preference shares. That is, you simply have to multiply the preference rate to par per share. So that means our regular dividend per preference shares would be the par of 50 pesos multiplied by the preference rate of 5%. You'll get 2.5 per share. At five, why is it 5%? 10%. The preference rate of 10%, you'll get 5 pesos per share of regular dividends to preference shares. Okay? And the regular dividends and the dividends given to ordinary shares is 1 peso per share. Now, but before before we can journalize, no, we still have to know how many outstanding preference shares and outstanding ordinary shares are there who are entitled to receive dividends. Okay, so for preference shares, we have the number of our shares is 100,000 originally, plus the additional 15,000 on January 1, and that's it. So meaning for preference shares, our total of issued and outstanding shares is 100,000 plus the additional 15,000, or 115,000 pesos. 150,000 number of preference shares issued and outstanding. On the other hand, for our ordinary shares, again, for our ordinary shares, we originally had 1 million. 1 million, 1, 2, 3, 1, 2, 3, and then we issued additional 25,000. And due to share split, we issued additional 1,025,000 number of shares. And we reacquired 20,000 of that and reissued 15,000 of our reacquired treasury shares. That will give us then 2 million 2,045,000 number of ordinary shares issued and outstanding. Okay, at 1 peso. So our total dividends would then be 115 preference shares multiplied by 5 pesos per share. You'll get a total of 575,000 per preference, and for ordinary, the total dividends for ordinary is 2,045,000 because the dividend per share is at 1 peso. So our total now of dividends payable is 575 plus 2045. Oh, 575. It's 2045. 2620. So that means on the date of declaration, we debit retained earnings. We debit retained earnings, 2620. And cash dividends payable. Oh, I'm sorry. Cash dividends payable at 2620. Okay, so now we're done we're done journalizing our transactions, right? So now we can proceed to answering the questions here. So for question number 1, How much is the share premium on the issuance of preference shares on January 1? We have 150,000 pesos. For question number 2, issuance share premium issuance of ordinary shares on February 1, we have 375,000 pesos. After the share split in June 1, how much was the par per ordinary shares? As we have computed kanina, the par is 10 divided by 2. That will give you 5 per share. And the number of shares outstanding after the share split is 1025 plus 1025. That will give you 2,050,000 issued and outstanding. And number 5, how much was debited to treasury shares? Of course, treasury shares are debited at cost. So we have 280,000 pesos. For our share premium on reissuance, the share premium on reissuance is the excess of the reissuance price over the reacquisition price, which is 2 pesos per share. And we have reissued 15,000 shares. So that will give us 30,000 of share premium. And then for the dividends declared, we have calculated that the total is at 2,620,000 pesos of dividends. And for question number 8, how many ordinary shares were outstanding as of December 31, 2021? We have known this during our calculation for our dividends declared for the year. And for ordinary shares, we know that it's 2,045,000 shares, 2,045,000 shares. And for our preference shares, it's 115,000. Now for question number 10, how much was the total share premium as of December 31, 2021? Include the share premium on original issuance of ordinary shares, preference shares, and share premium on treasury. Now for the share premium on our original issuance on preference shares, originally we have 1 million. And the only additional issuance or the only transaction in 2020 affecting our preference shares, which also affected our share premium on the original issuance of preference shares, is on January 1, where we had a share premium of 150,000. Okay? So that means that our total share premium on preference shares original issuance is 1,150,000. For our share premium on ordinary shares original issuance, we originally have a balance of 5 million pesos here. And then the additional original issuance affecting share premium on ordinary shares and therefore affecting our share premium on original issuance of ordinary shares was only on February 1 issuance, where we had a share premium of 375,000 pesos. That will give us a total of 5,375,000 share premium on the original issuance of ordinary shares. Now, for our share premium on treasury shares, the only account or the only transaction which affected our treasury shares and therefore affecting our share premium on the reissuance of treasury shares is the reissuance of treasury shares on October 31, wherein we had a share premium recorded at 30,000 pesos. So that will give us the so that means that our total share premium is at 6,555,000 HBV. Okay, so with that, now we're done discussing our practice drill. Let me just check if our solutions manual have the same answer as we had on this video. So number 150, 375, 5, 30, 30. Okay, so that means that in this video and your solutions manual on your practice drill as sent to your classroom are of equal equal answers. Okay, are of the same answers. So with that, we're done discussing your practice drill. I hope you were able to learn something today. And if you have any clarifications or any questions regarding this topic or any topics before this, please do not hesitate to contact me or to email me. Okay, so that's all for today. Have a great day.